This is the Kadena one-year overview reading for the year of 2025. It's currently June 21st, 2024, 12:49 p.m. Eastern Time. Kadena at the time of this reading is 0.5907 or just under 60 cents USD. The 2025 Kadena reading was created on April 13th, 2024 at 7:18 p.m. Eastern Time. That's the video playing for you in the lower left corner. The overall theme of behavior for the 2025, we have an important technical price level on a multi-year scale that's highlighted. It usually acts as resistance. On this kind of a scale, it's very likely that it's like it's either a high or a low, and it's crossed with a decline on a one-year chart scale down to and through support to meet another support, and then we rotate sideways along that support. And this should be a pretty significant decline that'll stand out, probably even on a multi-year. Behavior around the high or highs, we have a decline to multiple support levels out of the highs. Interesting, and there's also a sideways fluctuating decline out of the highs that at least one of the highs that offers opportunity to open up a long position, indicating that we may very well see the high more than once. We have a big move out of the low for the year, reaching for a distant resistance, so it'll really be a pronounced move to the upside because it's coming out of the low. It's going to go for a really distant resistance at least once. I left out that there's also some chance of being misled in the early part of the year near the high, one of the highs in the early part of the year. We'll get into that in more detail as we progress through the reading. Also, some important things. We've got a cross-reading congruency. The high card for the multi-year reading is the crossing card for this reading. The science card, like I said, could indicate a high. You mix that with the cross-reading congruency, pretty significant signal that we're going to see like a major high on a multi-year scale. Now, if you've never seen one of these SO meta readings before, you're new to the channel. These cards going left to right, there's 4 cards in a cluster, right? And these clusters going left to right each represent 1 month. The 2 cards in the center of each cluster represent about 2 weeks of time. But it's important to understand, we're predicting timing down to the week here, but not every card's energy will necessarily line up perfectly with 2 weeks of time. So there may be cases, some readings, not every single 2025 reading that I do is going to be 100% accurate on timing. Some of them might be a little bit off. Most of them will be 100%, but some of them might be a little bit off. And my point being is that when you give it plus or minus 2 weeks of wiggle room to stay on track and not kind of like lose your direction and lose your idea of what you need to be doing, make sure to follow the sequence of events as outlined by the prediction, because even when we're plus or minus 2 weeks, we're still going to have the sequence of events be accurate. And whenever I am wrong about something in a reading, never have I been wrong on an entire reading. Like, it's usually like one little piece of a reading, one little piece. Could be a high, could be a low. That's a big piece, but that doesn't mean that the rest of the reading won't be accurate still. So that's important to understand. Follow the sequence of events as outlined by the prediction. And we're going to get into the timing of the highs and lows, the best trade opportunities and all that in just a moment. But before we do, I just want to make sure you're aware. The whole purpose of the channel is to transmute some of the competitive energy of the stock market into goodwill. We do that by following the rule of karma for the channel. You go to the resources tab of our website, Tarot for Traders, and 5% of the profits from every profitable trade utilizing this information should be donated forward to one of these charities, or pick a charity of your choosing as long as you're paying 5% forward, and then 5% should be sent back to the channel through one of these links. If you're international, you can use Wise or you can use YouTube tips, and that leaves you at 90%. Make sure to spend that 90% out of love. As long as you follow those rules, you follow the rule of karma for the channel, the universe considers you an angel investor. It's going to send it back to you tenfold for following through. Blessings to all my angel investors. Let's get back into it. All right, so we have a peak at the very beginning of the year. A lot of price change here. Pretty significant decline off of the peak into a trough. These are peak and a trough on the scale of a one-year chart. Just a little while after the peak at the beginning, like the first week of the year, there's a trough maybe like the second week of the year on a 1-month scale, and that'll take place within a period of erratic behavior back and forth through the same price level. In the midst of that erratic behavior, we should revisit a crest that was recently a past opportunity on a multi-day scale. Also a trade opportunity in there that I'll talk about in more detail in the paid version. And it looks like there's that important price level highlighted. Probably this price level here, whatever this peak is very likely our science price level. You see it here, or maybe it's the high here, hard to say, but it'll be highlighted around here. Big move, like a gap up or a big move out of oversold territory on a multi-day scale to reach for the high, the January high, and there's a failed attempt to break through key resistance in the later part of January, followed by a decline through key support. Looks like that decline takes us probably right into the cusp, or maybe the very end of the month of January, but around the cusp, there's a fast sudden move higher, ending that decline, taking us into February. All right, so that prominent move higher into February takes us to a prominent peak mid-February. It'll stand out on a one-year chart scale. Like I said, there's important resistance there and a pretty sharp decline off of that. We actually have a full retracement of the rally into February. There's a full retracement out of it, and possibly even more than just a full retracement, because we've got a prominent trough on a one-year chart scale in the later part of February. There's a breakout on a multi-day scale out of that prominent trough, but it's important to understand that. And usually when you see the Princess of Swords, what it's indicating is a decline from resistance, and then we return back to it in the not-too-distant future. In early March, we have a resistance level that we failed to break through many times before that's highlighted. Out of the March low, there's a huge move to the upside, pushing the upper end of a multi-day range higher. An important opportunity at the March high, or an improbable move, some sort of like really notable improbable opportunity taking place at the March high. And when we look back at 2025, very likely it'll stand out amongst all the opportunities that we're going to talk about. And again, I'll get into that in a lot more detail in the paid version. The later part of March, we have a decline to and through support to meet another support. We rotate sideways along that support for a bit and then break down through more supports. So I think what happens is we probably break out through whatever this resistance is that we failed to break through here in January. We probably break out through it here It's hard to place this low if it's in February or March. It might be that we're seeing it twice, but it's somewhere there around the cusp of February, March, and this big move out of it. The early part of April, we had 3 crisscrosses back and forth through the same price level, confirming a bullish trend on that third cross, which is to the upside. Sideways rotation, and then a big move to reach for the April high. I'm advised to be cautious at the April high, multiple false tops, or some sort of tricky technical chart behavior. The April low forms within close time proximity to a prominent peak on a 1-year chart scale, and it looks like that's probably midway into the month. It'll form when we have near the April low. There's a period of volatility that ends with the fast sudden move higher. That fast sudden move higher takes us into probably a high mid month of April, and then we decline out of that, increasing with momentum moving forward in time. And that brings us to a mixed sideways S formation within a channel taking place in the earlier part of May, where we declined from a resistance on a multi-day scale to meet support, reverse, return all the way back to that resistance, and then reverse and retrace all the way back to the support, creating a sideways S within a channel. Sometimes horizontal. On this kind of scale, it's probably at an angle usually to the downside. But there's the May high forms when we have a failed attempt to break through key resistance, followed by decline through key support. But the important thing about this resistance is that technicals would lead us to believe that we're going to break out through this resistance, but instead we decline through key support, and it's usually key support that was just previously established falsely, and that's kind of like what gives you the idea that we will break through, but instead we decline. There's a peak towards the end of the month of May, and we have out of the May low, which is a prominent trough on a 1-year chart scale. Out of that May low, we have a significant rally increasing with momentum moving forward into the May high in the later part of May. Looks like the rally turns over in early June, pretty notably. There's a prominent peak somewhere around somewhere in June. Hard to say if it's in early June or late June. It's in there in June. Hard to say what part, but it forms when we have a rally along a diagonal trend line that ends with a fast sudden move higher, and then a breakdown through that diagonal trend line with increasing volatility on the way down. I think it's probably in the earlier part of June, right? Because that increasing volatility on the way down takes us into a low, where a month's low, where we have a period of volatility and a sharp drop that stands out in that period of volatility, right? We've also got this unicursal hexagram energy off of the peak here. So that's important to point out. A significant, high probability of a significant drop off of a peak here on a 1-year chart scale. We find support in the later part of June, and then we rotate sideways into July, where we've got 2 cross-reading congruencies. We'll talk about in more detail in the paid version. Before we go any further, let's take a look and see how we're doing for 2024 thus far. The 2024 reading was created on November 14th, 2023 at 1:32 p.m. Eastern Time. Remember what I said about plus or minus 2 weeks of wiggle room. So we've got a lowest low thus far here, and it looks like it ends up being in February, when I have it kind of feel like March, but we did have a sharp drop here in February, which was predicted. And then we've got highest high around April, May, and it looks like we were a little bit late. We had a highest high here in March, but another sharp drop off of the April high. That's a unicursal hexagram drop. We established support in May. There's a pop and then a drop. That's that lover's card. And we're also at lowest lows again, right? I have it says lowest low here in May within close time proximity to the May high, and that's pretty solid. We were off on there being a high here, so we're a little bit off on those highs. But as far as the lows are concerned, solid lows. We did nail some of these highs, and what we should see is an even lower price level as we continue into August. As far as trades are concerned, could have opened up a short here in January and closed it at the low in February. That would have worked out quite well. Off the February high, there was opportunity, not the best, but you could have made some money. There was a trade opportunity there. That probably would have been a little tricky. That one wouldn't have worked out so well. So you see, they're not always going to work out. Most of the trades are pretty solid, but occasionally, that's why I always tell you guys, never bet everything on one trade. Like, just trade responsibly. If you trade responsibly, you'll have a superior edge. If you don't trade responsibly, you're going to mess up your psychology. You're going to do silly things, and you're going to see yourself be right and still lose money. And the main theme here is opportunity to open up a short position in the midst of a rally, crossed with a decline off oversold territory. With the June high, you could have opened up a short position before a sharp decline, which you're probably best off closing at the very end of June. So overall, pretty solid. Not my best work, but this was done in 2023. I've done so many 1 years since that time. In 2023, 1 year readings were kind of like new. It was a new addition. I've gotten so much better since then, it's ridiculous. So let's get back into it. Oh, and if you're interested in a paid version, really great way to support the channel. There's 3 ways you can do that. Check it out here. All right, so we have this significant low on a 1 year chart scale taking place here in July. There's an important range, bottom of an important range on a one year chart scale minimum, a notable reversal off of the July low, an unexpected move to the upside to reach for an important resistance and technical price level on a multi-year scale at the July high. And it looks like the significant low is probably towards the later part of July, and there's this big move out of it, starting out of a decline, taking us from the bottom of the range all the way to the top of the range. I'm advised not to chase that rally. In August, we have an important price level on a 1 year chart scale highlighted at the August low, and we kind of flatten out there. And then the later part of August, we have a decline through multiple support levels. They'll really stand out on a 1 year chart scale. It's possible that we have a brief peak right on the cusp of August and September. It's not the strongest, like, it's not that clear, so I'm not sure I would bet money on it, but there's a possibility of a prominent peak there on a 1 year chart scale. Either way, we have a brief peak that's easily missed, followed by decline to multiple supports in the early part of September, taking us into a prominent trough on a 1 year chart scale at the September low. Big rally out of that September low However, the later part of September, we have a decline to revisit a support level on a multi-day scale that we recently met that was a past opportunity. And off of the September high, we have another significant decline, a universal decline. So there should be some sideways rotation and then a pretty serious decline off of that September high. In early October, we have a period of sideways rotation and a sharp drop that'll stand out in that period of sideways rotation. Two peaks mid-month of October, and it should be an overbought crest that we sell off from down into troughs mid to late part of the month. Another significant trough on a one-year chart scale highlighted there in October. And the October low forms when from a prominent peak on a one-year chart scale, we sell off pretty notably into that October low, which it looks like it's either mid-month or late month. Notable trade opportunity there as well. I'll talk about in detail in the paid version. An important price level on a one-year chart scale highlighted in the early part of November, and we have either bearish price swings either or bearish price swings and or a sharp drop on a one-year chart scale in the early part involved in that price level. There's a prominent trough on a one-year chart scale within close time proximity to the November high, and the November low is also a prominent trough. So the high and the low are probably within close time proximity to each other. The November high and low, and then November's low, we have this big move out of it. It'll stand out on a one-year chart scale. The Magus card in the later part of November, indicating a lot of price change. And a notable trade opportunity in there. Hard to say. I think it's probably mixed direction, but there should be a lot of price change there, offering, and it's a big move to the upside there. But a lot of price change taking us into December. Matter of fact, the November high forms when we have a period of sideways rotation that ends with a fast sudden move higher, and again, that's within close time proximity to a prominent trough on a one-year chart scale. That big move higher takes us into December, where we have a lot of price change in December. A trade opportunity there and a sharp decline to a support level that'll stand out on a one-year chart scale. The December highs will be a prominent high on a one-year chart scale, and there's another sharp unicursal hexagram decline out of the December high. A pop and drop to create the December high. Behavior around the December low. We have a resistance level that that's important on a one-year chart scale minimum that we'll revisit in the not too distant future near the December low. An important technical price level on a multi-year scale, actually. And then the later part of December, we have sideways rotation along key support. We rise to meet the nearest critical resistance and then fall back down and continue rotating sideways along key support. Right on the cusp of December and January, looks like there's a pretty big bullish move to the upside. And then the sneak preview for 2026, we attempt to establish support, I should say, with sideways rotation that'll really stand out on a one-year chart scale. Now, I'm going to get into the timing of the highs and the lows as well as the best trade opportunities. We're going to talk about what these cross-reading congruencies mean and where this one-year reading fits into the larger picture of the multi-year reading. We're going to talk about price levels if there's any price level information. And as far as trades are concerned, I'm going to talk about what type of chart behavior to look for as far as entry and exit into and out of those trades. All of that stuff in the paid version, super valuable, can't find it anywhere else. You get it here. You go to our services, SO Post, scroll down to one-year report, click here to order, and you click on choose when they're discounted because they've already been done. Roughly like a 48-hour turnaround. You basically just pick whichever one you want. There's some 2025s in there as well, and there'll be some 2026s in there pretty soon. As we release them, as people order customs or we put out 1 years, we add them to the list. You can order any of them here at a discounted price. Or if you're interested in a ticker that we're not covering or crypto that we're not covering, click on one-year report, click here to order, click on custom report, specify the year, specify the ticker of crypto, add the card, great way to support the channel, well undervalued or underpriced, I should say. And the final way that you can go about getting the one-year report to one of our total access members is our top tier subscription. You go to SO Post, scroll down to total access, click here to order. This gets you access to the paid version of basically everything that we have, all of the 1 years that we have, and as they come in, new ones come out, you get access to all of those, and you also get access to the monthly paid versions of the monthly set regularly come out every month, as well as any one-offs that people order that we throw out there. All of that you get with a total access subscription. Best way to support the channel. Much appreciation everybody does that. Love you guys. Let's get back into it. That's the public version of KDA Kadena for 2025. Thank you so much for watching. Let me know what you think by hitting that like button. As always, make sure to follow that rule of karma. You know where to go. You know what to do. Blessings to all my angel investors. I'll see you guys on the next one.